Testing, testing. JB here. February 18th, 2022. Just getting on the audio, staring at the screen and watching everything kind of melt is not something enjoyable. So I figured I'd do a quick rant, kind of giving my thoughts a little bit on some of the things I'm looking at and go from there. But crazy stuff. Yeah, I'm trying to think of some scenarios over the past that remind me of what we're in now. To me, some of it is we had those back and forth trade war banters with China and the U.S. A couple years ago. You had every day there was a new headline. U.S. is going to impose crazy tariffs. The market would drop 3%. Someone would come on and refute that. The market would rally the next day, and it becomes a tough environment, at least for how I trade, because I'm looking for follow through, right? So I'm not the type of trader that looks for scalps, intraday scalps, unless I'm up a couple 100%. Then of course I'll close it out. But I'm not here to trade something for a 5-10% scalp. That's just not why I trade options. So we'll have to see how things play out. You would think with the 3-day weekend, there's going to be a lot of chatter, people concerned. You still have this inflation situation, a repricing of the growth momentum names. So certainly you would think that people would be a little less apt to load up some things today, which ironically enough is why I thought maybe it would bounce today. But looks like today's setting up just like yesterday. We'll see. 340 on the Qs look like support. We'll see if that holds. So let me go into some of the stocks I'm looking at. First I put on there was KRNT, KRNT Digital, which is one of my top 5 stocks for 2022. Great earnings. Take a look at what the analysts have put out. Take a look at what happened with ROKU. Analysts playing catch up on that name. But so I'm not saying that the analyst is the be all end all for a company, but I do think it bodes well for the stock. Today was Berenberg Bank. I think it was Citi the day after earnings. All these Craig Hallum, but that was before earnings. Still well in the mid to upper 100s. You still have the Amazon stake, and you take a look at companies that I think are taking the sector that needs to be disrupted. This is one of those companies. So, yeah, I really like it. I just wish the premiums were less and it had weekly strikes. Of course, it does not, but it sold off from the highs this morning. Actually, it was 98 and change yesterday. I think it hit 100 the day before. And here it is today after the adjustment from Berenberg Bank. The stock went all the way down to 87. Certainly a name I'll be watching going forward, especially if it holds here. And here's, like Nihar just said, here comes the Qs hitting lows right now. So that's that one. The second one was Shutterstock. And despite the huge pull we've had over the last week or so, well, last couple weeks, it's kind of hanging here. Huge earnings. A company has, no debt, plenty of cash. I think they just issued a dividend. I think it continues to bode well for the stock, and I think it heads back over $100. So I was watching it yesterday. 95 strikes looked interesting. Sure enough, what does it do? It just kind of, it's range bound, but certainly a name I'll continue to look for upside. Thanks, Nihar. And then, yeah, not going to talk too much about SSYS. SSYS and Fubo both report earnings next Wednesday. So that kind of helps with the premiums a little bit, have the March strikes. If the market finds any footing, I think SSYS in particular will trade over into the low to mid 30s. Of course, earnings could be a crapshoot. So we've seen what happens with all these growth names. Shopify is down $300 this week. Roku 2 weeks ago with Facebook. So just probably not the best environment to trade calls into earnings, but I still think that the company 2022 is going to be the return to growth for SSYS, the backdrop of M&A. So that's why I'll probably hold my March strikes. I had an opportunity. I was trying to get them out for a double. The calls came right up to the ask and didn't fill. So yeah, I'll continue to hold those. That's SSYS. Fubo getting destroyed. It's not like the stock hadn't come off lows already, but you have the Roku earnings just kind of putting a hurting on some of these names in that space. So I'll continue to hold my Fubo calls. You would think with the World Cup coming, Super Bowl, record gambling results, you would think it would be doing much better, but it's not. So that's Fubo. Oh, TripAdvisor. So TripAdvisor, just such a mind-boggling name because they are the most trafficked travel sites on the internet, right? They have the most folks who are going somewhere, the first place or second place or the third place, but the top three they go to TripAdvisor, and how they have failed to monetize this traffic it's just beyond me. It just does not make sense. So they were looking to roll out their Trip Plus service last year. I thought that would be the catalyst for the stock to really get going. That has not happened yet. Then you have the founder, CEO leaving. You would think a change in leadership might be the bottom for TripAdvisor. At some point you have to think with where they are and how they trade in relation to Expedia and Booking.com or Priceline. You would think there'd be an opportunity to play for major upside. Maybe it's next quarter, maybe it is this quarter once the market finds footing, but just kind of mind-boggling to me. So I was watching yesterday. I thought maybe if it did a red to green move after its earnings, there'd be a nice opportunity to play for calls. That didn't happen. Watching it today, all the way up to 29.43 right out of the gate. Now it's back here at 27.77, down nearly 2.5%, over 2.5%. Definitely a name I'll be watching again to play for upside. Yeah, and then that's it. Roku and Danger Rangers asking me what about some Roku puts yesterday when the stock's trading in the 140s, and I start looking, or maybe it was trading in the 150s, and the 105s, the 100s, $40 out of money with 1.5 days till expiration. It didn't jive to me when you're paying 50 cents. Well, they were 30 cents. They went up to $1. I think they closed at $1. It's not the type of risk reward. You're paying for an extreme outcome that rarely happens. I don't know how many times Roku's traded down 30% or 25% after earnings, but it's probably one other time maybe. So the odds of that happening are pretty minuscule. Not only that, the stock is substantially off its highs just only a couple months ago. So, this stock was over 450 in August. So here it is. It was going to be down 70% year to date. So, not year to date, but over the last 9-10 months. So that kind of risk reward just doesn't jive for me. So of course I missed that. And then not only that, because the implied volatility is so high and the premiums are so expensive, even that huge drop, the puts were only up a couple 100%. If you had got that move last year and you had the puts would have been inexpensive, and you're talking 5-10,000% on the puts. So it's just a tough environment. And some of these put plays that you see, some of these stocks melting off during the day, the premiums are so expensive that even when it sells off, the premiums aren't moving much. And then if we get a bounce, you're losing money on a trade. So it's very tough to trade this environment when the implied volatility is so high. But hopefully, and I put on a watch list. I'm hoping for at least some opportunities to nibble on some calls on some bounce plays. Some of the names that are strong, the Shutter stocks, Expedia has been strong. Some of the names that have held in there. I think that's it. I'm trying to think of some of these other. I'm actually doing my 2K challenge at some point in the middle of March. We'll have to see if the premiums start to come down a little bit. The market finds, it becomes range bound or at least kind of finds some support. I'm trying to think the last time I did this. Maybe it was 2013, 2014. And I'm also trying to find a platform to do it where it makes sense. Back when I first did it, and I'm trying to think some of the iterations, maybe I did it a couple times. One time I did it on a platform, they let you mirror the trade, and I would put an order in for 5 or 10 contracts, and it was, I don't know how many, maybe it was 100 people or 200. There was a lot of folks following, so I'd put it in, and all of a sudden it would just cause crazy swings on the option prices and serious issues. So if I'm not playing a liquid name, it makes it difficult for entries and exits. So I'm trying to figure that out, but I figure middle of March, I can carve some time out and do that. I know a lot of folks have been asking about that, and that's been years in the making, the JB effect. I'm trying to think of some other names that kind of drive me nuts. But it's it's funny. Take a look at Shopify, right? So Shopify, great earnings, and you would take a look, and maybe if this was a report that they had a couple quarters ago, the stock would rally. But here it is, a company. It does $4 billion in sales. It's $84 billion market cap. So it's still, even with its pull from $1,700 in middle of November, it still trades 20 times revenue. So yeah, it's just crazy. Yeah. I'll have the earnings list up for next week. It's a holiday, so make sure you can definitely stop in on Monday. But the market is closed on Monday, so it's a 4-day holiday shortened trading week. I'm trying to look at some of these other names. Yeah, Shutterstock, Cornet. Oh, OPRX. OPRX is one of my top 5 stocks for 2022 as well. Optimize RX, I think they're called, right? They did preliminary revenue guidance Tuesday? I guess on Tuesday. Yeah, DraftKings, just terrible. Another great story in the healthcare space, but again, it's all about these multiples. So you take a look at OPRX, and it trades a crazy multiple in terms of revenues. $57 million in revenues, $826 million market cap. So you're talking 6 times revenues, 16 times revenues. That's actually less than Shopify, so maybe there's an opportunity to play that for upside. Yeah, SE Global, Coupa Software, Arista Networks, crazy moves. But hopefully we find at least a short-term bottom, a playable bottom. Yeah, Coupa, Zebra, right? So I had puts on Zebra. Well, I say Zebra, ticker ZBRA, a couple weeks ago. Was it a couple weeks? Right before, maybe it was before January option expiration. I think I had like the 480 puts. And then what does it do? The day after option expiration, that Monday, the stock falls under the option strike that I had, the put strike that I had. And now you take a look a month later, it's trading at 420. Some other names, if things got crazy. So I'm 425 on the SPY is kind of I put my bear suit on, and I'll probably look to get some 3-time bear ETFs. And then I'll probably look at some of the names that I think will probably trigger some sales. ServiceNow, Palo Alto, PANW, even Meli Cabra. I'm surprised that thing's still up at, well, it was over $1,000 when I last looked earlier this morning. Now it's at 957. Those are some of the names that maybe it's just like a mass liquidation. And I'm trying to think of some examples, but everybody gets used to seeing so many stocks at certain prices, and it's kind of like a boxing match where we were in the first 5 or 6 rounds where you're just getting slugged, and you're fighting back, and then eventually you don't fight back anymore, and these stocks are just going to have, I guess, I wouldn't call it snowball effect, but probably accelerate to the downside. And also, I think some of it too, you take a look at some of these huge moves to the upside, and it's a supply-demand situation, right? So as the stocks went up, there was less supply of stock because people are holding, everybody's holding on to their shares because, wow, we're making lots of money. More people are buying, then they're using leverage to buy. So then the outstanding share counts, well, not the outstanding share counts, but the amount of stock out there to buy, it decreases, right? There's more demand, less supply. But now as we head the other direction, it's like there's not a situation where people, it's not as much, there's more supply out there, right? People have sold. So it just becomes, I guess, like a slippery slope, like easier for some of these sell-offs to accelerate. Hopefully that doesn't become the case. We don't have margin calls and all that. And the situation with Ukraine and Russia, which hopefully is just more posturing and headlines, like a lot of these other things that have happened over the last couple of years. Hopefully that gets resolved, and then we can kind of find some footing and get a little bit back to normalcy. But certainly interesting last couple of weeks. I think that's about it. Oh, Joe Rogan Experience not loading on Spotify. Yeah, we'll have to see how that whole situation too. Let's see. I didn't even. Oh wow, it's down to 50. Wow. Yeah. Roblox, RBLX. Yeah, and you feel bad. I mean, not that I would feel bad for Cassie Wood, because she obviously She has lots of money, just not enough to have a Zoom subscription. But it's like everybody harps on her. She did, when Tesla was down before the split, it was $200. She called it to go to like $5,000, and everybody called her crazy. And then split adjusted, it went over that 5,000 threshold. Obviously, hard times right now, and who knows where things go from here. And she's already reiterating her call that, on a 5-year timeline, all the stocks that she's going in with artificial intelligence and EV and gene sequencing and all that fun stuff, are those stocks that she's been in are going to be back above where she bought them at. So I guess we called it crazy a couple of years ago with Tesla. We'll see if we're calling it crazy in 5 years from now. But yeah, I think that's it, folks. I'm going to try and get back on later. Not much to rant about, just staring at some of these moves and wondering, is this going to continue to melt into the afternoon, or are we going to finally find some kind of footing and maybe there's playable bounces on some of these names? So that's it, folks. I'll be back. Rock and roll. If I'm not back, have a great weekend, and I'll see you all next week. Rock and roll.